Europe appears to have turned the economic corner. The eurozone is growing faster than the US, reversing the trend of recent years when it was one of the world's economic laggards. However, there is still little sign of companies upping their investment plans. Deloitte talked to over 1,300 Europe-based chief financial officers, and the research sheds light on this paradox and what it means for policymakers. I'm here with Chris Gentle from Deloitte to discuss the findings. So, Chris, are Europe's CFOs more or less optimistic than they were a year ago?
Well, it's good news that a third of CFOs across Europe are reporting that they are more optimistic about the year ahead. And that's not only just in terms of revenues, but also in terms of margins as well, which points to stronger profitability, which is great. Somewhat counterintuitively, we see more optimism within the eurozone than we do outside it, which again, we wouldn't have expected in the past. But this is good news for Europe in terms of an economic turnaround.
Was there one country where CFOs were particularly cheerful?
Well, as you can see from the slide here, that actually it's not just in one country. Yes, the Spanish were particularly optimistic, but you can see here in Spain, Germany, the UK, Finland, lots of countries across Europe are looking much more positive about what their prospects are for the year ahead.
But why is that optimism then not translating into an upswing in investment?
So I think that's really the €1 trillion question. Why €1 trillion? Well, that's the amount that listed companies actually have on their balance sheet at the present time. It's also the amount that the ECB are roughly going to use in terms of quantitative easing. So I think what we have here is not really a kind of cash issue, it's a confidence issue. And we see in the results we've got here that really confidence is not coming through in terms of investment decisions for the future. And that is of some concern. So that's why we're saying cautious optimism rather than a full-blown recovery here.
And what are CFOs' priorities then, if they're still cautious?
Unfortunately, they're still looking at cost reduction as being their number one issue. Clearly, what we're hoping for here is basically a translation of that cash and optimism into more business investment. That yet hasn't come through, and they're still reporting some concerns, and they're still being somewhat conservative and risk averse in saying cost reduction is the number one thing they're looking at. Now, that is a concern when we look at the wider picture. Over the last 5 years, we've seen companies within Europe, in the global Fortune 500, a quarter of those actually move out of that particular index. So there does seem to be an issue around competitiveness for European companies.
Yes, I mean, what are the long-term dangers of this in terms of Europe's future competitive position?
Well, I think there's really an issue here, not only for policymakers, but also in terms of investors, which is that if that business investment doesn't come back, it has the potential of blunting competitiveness of European companies in the future. If we think now really that we're living in a very digital age, a globalization age, where technology is very, very important, if we're not seeing investment in things like R&D, in technology, etc., then arguably Europe could fall further behind, or European companies could fall further behind in that kind of global race. And you know, the global Fortune 500 tends to indicate that that may be happening.
And what message did the CFOs have then for policymakers?
I think it's really important to try and connect the debate here between, yes, we've got some very conservative and risk-averse companies. We've also got a situation where policymakers are looking at jobs and growth across Europe. And how do you really kind of connect those two agendas? What we asked here is, and we can see from the results, is it shows that there are three things that are top of the pile there. One is structural reforms, really aligned to national governments. The second is really around infrastructure, which is obviously aligned to what the Juncker plan aims to do, and the EIB. And then the third thing is around monetary conditions, which is obviously what the ECB. So there does seem the basis there for an agenda of change, which CFOs across Europe are looking to make happen and really kind of change this situation around confidence.
So you're saying they want policymakers to give them some support, and then they'll translate their cash into more confidence in terms of investment.
Yeah, I think that's one of the very strong messages here, is that that's what needs to happen. I think if we can put that final piece of the jigsaw there, then Europe may start growing more sustainably in the future.
Chris, thank you very much for talking to the FT.
Thank you.